All right, PMI, let's talk about it. So PMI stands for Private Mortgage Insurance. And PMI kicks in when you're not able to afford at least 20% of your down payment. And again, in Biden's 2024 economy, who is able to afford a freaking 20% down payment? 20% of your purchase price, by the way. So most people, unfortunately, aren't able to afford 20%. So they're going to be stuck paying PMI. And PMI is insurance, as the name implies. And it's just basically saying, thank you, bank, for letting me borrow this money. I'm going to pay you a risk premium so that in case I can no longer afford my mortgage, you can at least walk away with some type of money. That's, in a nutshell, effectively what PMI is. So a lot of these down payment assistance programs, whether it's a state program or a federal program, you're automatically going to be kicked into the bucket of PMI because 9 times out of 10, you're not able to pay 20% of the purchase price, or else you wouldn't be utilizing the down payment assistance program. So I myself am an FHA baby. I took advantage of the FHA loan. FHA stands for Federal Housing Agency, which the HUD, I think it's Housing and Urban Development branch of the government, provides to home buyers. And I low-key regret it. I think when you get in the case of down payment assistance or paying less than 20%, it's oftentimes hard to get out of the PMI bucket. So I effectively pay my lender about $400 more each month just because my down payment was less than 20% of my purchase price. Not only are you paying PMI as a part of your mortgage payment, and when you close, you also have to prepay a chunk of PMI. So look closely at your escrow statements because I don't think I realized this until I was reviewing my escrow statement, that they actually have a line for, they call it prepaid PMI essentially. So I think my prepaid PMI was something like 12 grand. So just 12 grand as like a bye-bye to that money. It's not going towards my principal. It don't go towards your regular mortgage interest. It's just simply, thank you, bank, for taking a chance on me. So really, really think twice before you go with these down payment assistance programs, and before you put less than 20% down. It could really financially bite you in the tail. Now, PMI is not something that stays on forever. PMI typically only applies until you build equity in your home of at least 20%. So equity is similar to appreciation. It's simply the difference between what your house is worth and how much you still owe on your house. So what your principal, your remaining principal payment is. Now, in a market like California, you can actually get into a space where your PMI drops off relatively early. And I say relative, and I'm just going to use like a 30-year mortgage as an example. I've heard of people being able to beat their PMI or get out of a PMI scenario within like 3 to 5 years. Now, that is not going to be the case for every market. Some markets don't. In some markets, the homes are not appreciating at the rapid speed that homes are in California. And so I would just say don't bank on that happening. Another way you can get out of PMI is if you refinance your loan. And if you're in the process of your refinance, your house has appreciated. So that could be a potential way you get out of paying PMI. But in a lot of cases, you're going to be stuck paying PMI for, I would say, at least expect to pay it for 5 to 10 years. And so just make sure, again, when you're putting together your financial picture and your budget to afford a home, that you're considering PMI. Now, I've mentioned Zillow before. So if y'all check out any home that's listed on Zillow, it doesn't have to be a home you're interested in. You can literally play around with the numbers. So you can plug in the purchase price, how much in down payments you want to put in. When you put in less than 20%, Zillow will automatically spit out PMI for you. Their PMI is not going to be exact because it is a bit of a science. And there are just several different inputs that go into it to figure out exactly how much PMI you'll be paying. But it's going to give you a pretty accurate estimate that'll get you close to what you can expect to pay. So PMI, in my humble opinion, it's the devil. I can't stand it because, again, it does not go towards your principal payment. It doesn't go towards your interest. It's just a simple thank you to the lender for allowing you to borrow the funds that it took to make your American dream happen. So make sure that when you're working with your mortgage broker or your lender and they're putting together the loan, make sure you are aware of all of the various components and different fees that you're going to be required to pay as a part of your mortgage, because PMI is one of those sneaky little pesky fees that they won't always mention to you outright, but it is there. Something else I want to mention really quickly is that typically when you are in a PMI situation and you're putting down less than 20%, your lender is going to require for you to impound your property taxes and your property insurance. All that means is rather than trusting you to pay your insurance on your own and to pay your property taxes on your own, they're going to roll those property taxes and insurance into your monthly mortgage or how much you have to give them. So I'm in that situation. Rather than me paying, so I'm with Mercury, rather than me paying Mercury, I think my policy is like $1,200 a year on my own and paying the state and the county and whatever other municipalities that I pay for property taxes. I think I pay like $7,500. Rather than paying that on my own, in order to protect themselves and their money, their investment, the financial institution or lender is going to say, no, baby girl, we got this. Go on and give us the money ahead of time so we can pay them directly and make sure that all of those amounts, the property tax and insurance, is paid so that there ain't no liens and there's nothing that will stop us from getting our coin back. So make sure, again, when you're talking to your lender, when you're talking to your mortgage broker, that you understand exactly what PMI you'll be responsible for paying at the time of closing and your monthly payment, and that you're comfortable with those funds because, you know, when things get tight, I often think about that extra $400 that I'm giving the bank every single month, and it's not a great feeling. All right, if y'all have more questions around PMI, please feel free to either drop them in the comments or feel free to DM me. Happy to share more details. All right, y'all, be blessed.